And I think that's the key element in all of this is we're all going to have these feelings, especially fear being the most common one, but it's knowing to correlate that with some other information before you decide to act.
Right, so the critical piece here is, well, I guess, one, you've got to be aware of what's going on, and two, you've got to have some sort of coping mechanism or some sort of plan for dealing with that, because a lot of traders, until the actual moment comes up.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
Okay, welcome back. It's Walter here from the Two Traders podcast. The other trader, of course, is Darren. Darren, how are you?
I'm very good, Walter. Nice to see you again.
Yeah, so Darren, we've talked a little bit about, sort of offline without the recording going, we've talked a little bit about fear in the past, and we thought that it would be a good idea to tackle that in today's episode. Now, of course, traders are all aware of the, fear and greed sort of thing. You hear that a lot. Trading is all about fear and greed. Markets are driven by fear and greed, herd mentality and stuff like that. But you were talking about a university lecturer who was going in to examine risk. Can you tell us that story? Because I found that fascinating.
Yeah, this Professor Mark Fenton. And basically he was going into the banks in London to speak to traders about risk. And one of his research colleagues came to him and said, this is amazing. All of these traders are talking to us about their emotions and their feelings. And so, basically he started to look into it a bit more, and he found that there was distinct differences between the high achievers and the low achievers when it came to how they dealt with their feelings. So basically he was speaking to the best traders, and he found that they could speak really plainly and clearly about their feelings. They were much more articulate about their feelings, and they weren't afraid to use them or discuss them. Whereas the underperforming traders were much more dismissive, and they were, I haven't got a problem with my emotions. I just push them to one side, and they sort of were either ignoring or suppressing their feelings. So we speak a lot about decision making and feelings, and this kind of supports that.
I think this is fascinating because a lot of times, just today I was talking to a trader, and we were talking about this idea of, when you first start trading, you look at trading and you think, well, we're just going to follow this system. All I need is a really good system to follow it, and then the money will follow. But in the end, what ends up happening with most traders, if they stick with it long enough, is they realize that your trading is actually sort of like a self-reflection. You get this feedback from your actions, from the market, and it really challenges you to closely examine how you react, the emotions that boil up, and the way that you approach things. Because if you don't do that, if you don't take those lessons that the market teaches you, then you're probably going to end up in a bit of trouble, would you say?
Yeah, definitely. I mean, one of his key findings was that the high achievers were really aware of how important the feelings were. And then they knew to, when they had that feeling, they knew not to just act on it straight away. So, they talked about their intuition as well. And the novice traders were talking about it like it's a sixth sense and like it's kind of a bit of, something mystical. Whereas, the high achievers knew that they were going to get these gut feelings, but they didn't rely on them. They always looked for something else to back it up. And I think that's the key element in all of this is we're all going to have these feelings, especially fear being the most common one, but it's knowing to sort of correlate that with some other information before you decide to act.
Right, so the critical piece here is, well, I guess, one, you've got to be aware of what's going on, and two, you've got to have some sort of coping mechanism or some sort of plan for dealing with that, because a lot of traders, until the actual moment comes up, until you're in a massive drawdown, if you haven't really sort of planned for that, and
it's not really the mechanics of dealing with your account so much as as how to deal with your emotions and what you go through. Unless you have a good way to navigate those choppy waters, there's a couple of things that can happen. I mean, and this happens quite a bit. It can end up ending your trading career. It's even ended traders' lives by having such a terrible string of emotions that they feel like, this is it for them. So it's something that's very confronting. And I suppose it sounds like, from what you learned, that they were able to zero in on this fact that one critical aspect of distinguishing a trader who's more, shall we say, highly evolved or more experienced is that he is likely to have a plan in terms of dealing with his emotions. He is aware of them, and he knows that there's a way for him to deal with these emotions, whereas those traders who just sort of say, no, I've got it, it's under control, I understand this, I do well, psychology isn't a problem for me, oh no, it's just following my system. Those people who are more dismissive of the emotions that come up are more likely to be either sort of earlier on in their trading career, or they're someone who just isn't quite there yet. They're not at the point where they're consistently making money.
Yeah, I completely agree, Walter. With the idea of planning, we always talk about, I think we spoke about it before, we always talk about planning the actual technical elements of our trading, but there's never any mention of planning what you're going to do when it comes to your exit and you're racked with fear, how you're going to deal with that emotion, how you're going to regulate that emotion, how you're going to deal with a losing day, because you must know your strategy is not going to win every day, no matter how good it is. So, where's the plan for how are you going to deal with those emotions at the end of the day? And people generally don't give that any thought. And there's very little written about it. I notice now it's becoming, it's coming more to the front in the sort of trading world, especially the retail trading world. And, there are some simple things you can do to sort of improve. I mean, he found that this is something that you do learn over time. The higher achievers had been trading for a longer time, and his research, I think, said about 10 to 15 years to get good at it. But, is that 10 to 15 years because at the start all they were looking at was the charts and the technical aspect of it? Can we sort of jump the queue? Can we sort of get an edge by learning to be more self-aware and using our emotions to our advantage, or being able to decide which emotions are good and that we should use and which ones are bad?
Right. So do you subscribe to the idea that there are good and bad emotions in trading, or is that kind of just a label, or how would you, for you personally, how would you characterize emotions?
It depends if there's a reason for it. That's in layman's terms, is there a reason that you're feeling fear? Say you take an entry and price goes 50 pips in your direction, and then it retraces nearly all the way back to your entry point. At that point, you get like a surge of emotions, and you have the fear because you had a winning trade, and now it's going to look like it's going to be a losing trade. But if in your plan this is a natural movement for the market, and this is what's expected to happen, then you shouldn't act out that emotion. So, that can be a bad emotion if you act it out. So at that point you have to back your feeling up with the data you've got, okay, and then act accordingly. That's how I see it, anyway.
Sure, yeah. And so, one of the interesting things I find in sort of the whole self-improvement or whatever you want to call it, personal psychology or something like that, self-help, I guess they would say in the U.S., so is this idea of making an effort to journal or to write down your thoughts and making an effort to just write something. And you might not think that you have anything to say or there's anything that's going to come of it, but typically what happens when people do this is they find that it sort of organizes their thoughts and their feelings. So they've had these in sort of underneath the surface, and they feel them, and they're there, and they're real. But once you start writing about them, it's almost as if you're an observer, right? And if we know anything about performance psychology, we know that one way that you can certainly become better at anything, improve your performance, is to sort of take a step outside of yourself and imagine that you're watching yourself doing that thing, whatever that thing is, if it's trading or if it's gymnastics or race car driving or whatever you're doing. So I often wonder if that's kind of, it's sort of the same mechanism with journaling or with keeping a track of your thoughts and feelings, is if that's what's going on, is that you're sort of taking the role of outside observer, and that's where the value is coming. That's where the changes are coming from, because you're taking it from a different perspective, and it may allow you, if you think logically, it may allow you to logically come to a plan. Or even if you're not necessarily a very logical person, you're more of a sort of, I go by my gut, even that may be helped by organizing your thoughts and writing them down, because it's like those things that were there and that you felt are now actually concrete and they're in front of you, and they're sort of easier to manipulate, I guess, is one way to look at it. Is that something that you've come across?
Yes, actually one of their main findings was, of the things that could help traders make better decisions, was writing things down. And they found that it kind of made you accountable for your actions then, because you'd written it down in paper what you were going to do, and then if you went off plan, then you kind of traders found it much harder to go off plan because they'd written it down. And they also found that the best traders had a rule that if they were going to change anything about their approach or their technical strategy, that they had to write it down first. And they said that, after like a really bad day, when the emotions are high and you're feeling really bad, sitting there writing it down, but usually by the time they'd written it down, they'd realised that it was just an emotional response rather than a logical response based on the strategy failing. There was two things that they found really important. One was writing things down, and the other one was emotional support. They found that the traders who had really good man managers and that gave them lots of support when they were in a hole and they needed to dig themselves out, those traders performed much better. I don't know where we get that support. I guess that's why we want to be in trading groups and Skype groups. That we can sort of share that support. The problem is with that though is people, being novices, tend to talk down the emotional side of it and just talk about the strategy. Oh, I should have added this moving average or the RSI, instead of saying, well, look, the strategy actually performed well today and I made some emotional decisions which cost me my profit.
That's right. That's exactly it, isn't it? It all comes back to you. I laugh when that's it. I laugh when I hear people say things like, oh, so you're a psychologist. Oh, but you're not doing anything with that. Why aren't you doing anything with that? And I think that's kind of a funny way to look at trading to me, because to me it is so much psychology and so much self-reflection. I think that's interesting that they suggested, or that they thought that the journaling aspect was something that was to be used as a tool. I wonder though, Darren, if in your experience, have you found that there's this idea of hindsight bias, right? So is there any way that can creep in and sort of color our views of what's happened? So let's say that we are going to take this seriously, okay, and we're going to write down our thoughts and our emotions at the end of the trading day, or even just at the end of a trade. So my concern would be that there's the potential for us to say something like, oh, well, I should have known that was going to happen because it did this. And so we kind of color the past with the knowledge of the future, right? Which is essentially what the hindsight bias is. And our history textbooks are full of this sort of thing. And those listeners who are familiar with the black swan and that idea, it's a kind of a similar idea, I suppose, where we have these events and then we go back and explain them away based on
what we know today. We explain the past. But my question, I guess, Darren, is there?
Yeah, I
is
don't
there
know
a
what we.
concern for
I
you?
don't know what you do about
Yeah.
that. I mean, I suppose at some point, if you're going to make it as a trader, your desire to be a trader has got to kick in and say, and realize that you're doing this, and say, okay, now's the time to start being accountable for my actions, or I might as well just give up. And you know, you see it all the time. People strive for years to try and make progress as a trader, and then you know they eventually give up. Or you know, sometimes it's kind of their final throw of the dice, and they throw out everything that they've been doing before and realize that the real problem is within themselves, and maybe they're the ones who finally make it. I mean, I used to think the 95% fail idea was made up, but you know, when you understand the psychology required to succeed at it, then you know you can understand that a lot of people would fail at trading. It's really hard, especially it's not as if we're walking into a classroom and there's someone from day one says, right, this is really important to you. I mean, from day one you go to any site and you're instantly hit with technical analysis. And when you realize that that's such a small part of the big picture, you know, then you realize why people do find it so hard. One other thing I wanted to mention that he found that the high achievers did, they had this ability to what he called reframing the feelings. So when the high achieving traders took a loss, they still were feeling that pain, that horrible pain you get whenever you take a loser, but then they were able to take that feeling and put it into context in the bigger picture. Okay, well, my win rate's only 50% anyway, so it's going to happen onwards and upwards, and they continue on, rather than you know their next action being affected by that. So yeah, it's a really interesting paper.
Right. So it sounds like if I'm getting this correct, it sounds like that the high achievers were able to view the trades as independent, essentially, right? It doesn't matter that my last trade was a loser, or my last three were a loser. The next one is here, it's in front of me, and I'm going to take it. Is that fair to say?
Yeah, definitely. They could see them in context of a bigger picture rather than a single trade being important.
Yeah, interesting. I think one of the things that comes up for me, Darren, is this idea that you're, like you say, when you get into trading, you're hit by technical analysis, you're hit by systems. You focus on the systems and you believe that is all you need. Now, I guess it brings up this idea of we spend so much time fine-tuning and honing our systems as traders. I'm not saying that everyone does. I'm saying that certainly it's a part of it, even if it's just the beginning, even if it's only the first couple of years as a trader where you spend time doing this, maybe not so much later on. But I believe for a lot of traders, it's the reason why they never get good. It's because they're always spending so much time on the system. It's all about the system and fine-tuning the system. But I wonder, and maybe this is probably better left for another episode, but one of the things I'd like to talk about is this idea that it's, you know, the edge really the system, or, and again, this is probably another episode, and we will have to talk about this in the future, is the reason why you make money as a trader, consistently pull in profits from the market, is that because of the work you are doing on you, with you, or is it because of all of the time and effort that you've done with your system? So that's kind of, to me, that's sort of the kernel in the issue, is where are you going to make your largest gains? Is it working on you, or is it by fine-tuning what you do in the market, your entries and exits and money management and so forth?
Yeah, well, that's going to be a whole nother episode, Walter, and yeah, maybe we should do that one next.
Yeah, that sounds good. I guess the reason why I ask that is because a lot of traders as I see it, in the beginning, that's the focus is on the system, and fair enough. Fair enough. Certainly, if I just stick with my system, so-and-so, he's written a book and he's doing this and it seems to work for him, or so-and-so on this forum in the trade, he's making money. Look at this. This awesome oscillator is perfect. It's the greatest system ever. I'll just do what he does. And they don't realize that so much of it is really about you, isn't it?
Mark Fenton made a really good analogy, and he was saying when you first learn to drive a car, your mind is all about the gear stick and the clutch and steering and combining all of them together, and you're having to use all of your brain power to do those. And then after a while, all of those just happen automatically without you giving any thought to it at all. And then the only time you put all of your focus on the driving is when say like a danger, say you saw a small child stepping out into the road, then all of a sudden all your focus gets kind of focused directly on what you're doing and how you're going to avoid the situation. And that is what happens in trading. You start off and you learn about the strategy, and then after a while you should be doing that automatically. And then your important decisions are at those key moments in trading, like when you need to take profit, when you need to pull the trigger, if something unusual happens. And then you need to focus all of your abilities on the chart and then make the right decision. And that's what really gives you the edge, is that ability in those key moments to make the right decision. And the actual how you drive, everyone drives slightly differently, but you're getting from A to B, basically. So there's a lot of technical strategies, but if you're not making right decisions at key moments, then you're going to struggle. That's how I see it, anyway.
Yeah, absolutely, and I think that's well said. I mean, we as traders, it's one of those things that it's almost like you feel like you have to say to someone who's starting out, you just have to see for yourself. You just have to see for yourself how it all falls into place. It's just sort of a natural progression.
Did you, I don't know which Market Wizard's book it's in, but in there he does an interview with a trader that remains nameless. And he's asking him about how he trades. And he literally gets up in the morning, goes to the charts, and these were sort of his words as much as I can remember. And basically he said, well, if price looks like it's going down, then I just sell, and if it continues to go down for a bit, then I'll take profit, and if it comes back and goes the other way, I'll close my sell and buy. And when he says that, it sounds like madness, but when you break it down and think about it, that is essentially what we all should be doing, really. And the technical strategy that we use is just, some sort of structure to build your working day around. And, I thought this guy must be really in tune with his emotions. And I imagine that's come through years and years of experience. That's not something you're just born with. That is years of experience, but it's not just years of experience of staring at the charts. That has obviously helped him, being able to sort of get a feeling when the market doesn't want to drop anymore and when he should exit. But, at some point he's become really self-aware of how important his decisions are, and how that, he's going to be feeling fear when he enters the market seemingly randomly. But at the end of the day, it doesn't really make a difference on his bottom line. And that was, a really good section out of the book for me. Because we have this fear of failure, what we do is we kind of, I don't really have a problem with my emotions, because they don't really want to confront the fact that they need to change their emotions. And, perhaps when you talk about psychology, it seems like something intangible that you can't really measure or work out, and so it probably appears to be something really difficult. But you find when you start doing just small exercises, like we were saying about writing things down, or perhaps discussing your emotions with trader friends about your emotions throughout the day, or when you were exiting and entering, those little things, and suddenly the lights start coming on, and you realize, you get a bit of confidence in your ability to change. Then I know when I quit, I was a heavy smoker for years, and I convinced myself that I couldn't give up, so I really never tried. And then when the moment came that I had to give up smoking, I did it really easily. And, I was expecting, you hear all these stories about massive physical withdrawal and that you'll be climbing the walls. I didn't have any of that. Once I'd decided in my mind that I'd had it with smoking, within a week, I never got a craving again. I just stopped. So, I think it's the same with trading. You just need to make that first sort of step of including it in your trading, and just put it, so whenever you talk about a technical element, talk about, the emotions and the feelings of operating that element as well. And I think you can achieve a lot in a short period of time, and maybe you'll never become a Zen master, but you really don't need to be. Denise Shull says that if most traders can remove 25% of their errors from their trading, they'd be profitable. So, that's maybe like a good target to aim for first. Stage 1, clear documented strategies, and then write things down before you make any changes. That's, if this is something you're having trouble with, that's stage 1. Yeah, write things down and clearly document your strategy. Everyone says they've done it. I imagine most people haven't.
Yeah, that's it. Yeah, and I would just add to that perhaps you want to make sure that you're able to track not only your trades but your emotions. Make sure that you have that right as a record. You can go back and look at that. One thing that makes sense for some people is to actually record your voice. So you, as you are taking your trade, you record your voice and you talk about the trade and why you like it and what you're concerned about and some possible scenarios. And then again, you record it if you're managing the trade, moving to break even, taking profit or whatever, and then recording again when the trade's finally closed out. So it's kind of an audio journal, or and sometimes you'll get more emotion in that than you would in just a written word. So that's another possible thing to do. And another thing that just popped into my head, and we'll probably have to tackle this in another episode altogether on its own, is finding some sort of way to, some sort of support system for you as a trader. Now, there are many different ways to do this, but one of the ones that I think we'll definitely have to jump into this in another episode is the idea of the trading tribe. And I'll get into the trading tribe later. Some of you are probably members and some of you know what I'm talking about, but for others this is going to be a new concept. But this is just essentially it's a trading group that anyone can join, and it's very useful because it's all about emotions. And I think that would probably make a good episode in and of itself. Well, this has been interesting, Darren. I really thank you for your time, and I look forward to seeing you next time.
Yeah, thank you, Walter, and I'll see you next time.